What's going on, guys? Welcome back to the channel. Matthew Muniz here. In today's video, we're going to talk about my personal financial goals for 2022. In this video, we're going to go through how I came up with my plan and how you can make your own. Quick little disclaimer, I am not a financial advisor. This is not financial advice. I do this as a hobby. All I'm trying to do is spark some interest so you guys go and do your own research and perhaps set yourself up for success in the future. So to start this video off, I'm going to go through a few steps you need to take before you get into actually investing in brokerage accounts such as Robinhood or M1. Now, when it comes to my financial planning, we will talk about that a little bit later in the video, but first we got to go over the basics. Step one, make a plan and stick to it. Doesn't matter if your investments are red, doesn't matter what changes, you got to stick to your plan. Obviously, if something comes up with your work and you're no longer receiving income, you're going to have to make changes, that's fine. But in general, make a plan, stick to it. Step two, do you work for a company that offers you some type of company match in a retirement savings plan? If so, you got to take advantage of that. That is free money and it has zero risk. So if you have a company match for a 401k, for instance, go ahead and contribute up to the company match so you're getting that free money. What more can we ask for in life other than free money? Maybe some likes on my YouTube account. If you want to smash the like button down below, that does make me very happy. But other than that, I'm good with free money. After you're meeting your company match, if it applies to you, you have to ask yourself, do you have an emergency fund? If not, you want to get at least $1,000. I like 3 to 6 months, but we'll say a minimum of $1,000 cash in a high yield interest savings account. That sounds like a joke because savings accounts offer almost zero interest, but a high yield savings account is still better than a checking account or a extremely low interest savings account. After we have our emergency fund and we are comfortable to move forward, we need to find out, do we have any debt? If we do, is it good debt or bad debt? A mortgage is not considered bad debt, assuming you have a good rate. If you have high interest loans, credit card debt, stuff like that, you want to focus on paying those off before you're putting more money into your financial future. You want to get rid of the high interest loans, 25% credit debt, and then focus on investments that are going to make you 8, 10, 12% in the future. You have to focus on paying off the debt if you have any. Assuming you do not, we can then go into the next step. Do we have a Roth IRA and are we able to contribute to one? If you are able to and you don't have one, you want to open one up. I personally like M1 Finance for my Roth, but that is just my opinion. There's many other good options out there. Roth IRA is a tax advantage account that you contribute to post-tax. All your money in that account is going to grow long-term tax-free. We don't want to pay the man, at least I don't want to. Now, once we have done all those steps, we're already doing those things. That's when we get into the fun stuff. We can really start planning and budgeting. Now, when we're talking about budgeting, I like to use an app called Mint. Mint is completely free. It is an app on your Android or your iPhone. I'm not sponsored by them, but it is a great way to track your net worth and your credit cards, your spending, all sorts of stuff like that. Now, this video is not going to explain to you how to budget, but once you have figured out how much money you make and how much money you spend, then you can determine what to do with your money. Or maybe you need to spend less or make more money so that you can invest more money. Now let's get into my actual financial planning and what I'm looking at for 2022 and then how I came up with those numbers. So when it came to my planning for financial goals of 2022, I pretty much used 3 things. I used Mint, the app I talked about. I used Excel, well, technically Google Sheets, and I used the investment calculator. Now there's a link for the investment calculator down below in the description, and we're gonna go through a couple examples using that. But for now, we're gonna look at my little spreadsheet. So in my spreadsheet here, I have a few things that we already talked about and then some things in addition. So for me, I have a plan to max out my 401k. Now in 2022, they did raise the annual contribution limit to $20,500 if you're under the age of 55, which I am, I'm 31. So my contributions for that will be $1,708 a month. And the great thing about that, the reason it's highlighted in blue, is I do not see this money. So it does not go to my bank account. My company takes that money out pre-tax, handles it all on their end. So when I get my paycheck, I don't even know that, that $1,700 was taken out of my paycheck. For me, that makes it a lot easier because I don't feel like I'm losing money. It's almost just like paying taxes, which I don't want to do, but we don't have any option. So for me, the 401k isn't an option. It just happens, just comes right out of my paycheck. The next thing, and this is not automated, I wish it was, is my Roth IRA. I plan on doing $500 a month. At the end of the year, that's going to be $6,000. $6,000 is also the annual contribution limit for an individual in the year 2022, as long as they're under the age of 55, which once again, I qualify for. Now, $500 a month is a significantly higher amount that I contributed to in 2021. So I want to raise that to finally hit the maximum. That's my goal for 2022. I was already maxing my 401k. I was not with the Roth, so this year I want to max both. So the next thing is M1 Finance. I started my M1 Finance account about 6 months ago, and all I'm contributing is $100 a month. I don't have any plans on changing that. It's low, but I actually really like the app. I took advantage of one of their aggressive pies, and I just do that monthly. It's all automated. I don't have to think about it. At the end of the year, it's going to be $1,200. The next part is my Robinhood. Now, this is my primary brokerage when it comes to investing. I do, on average, anywhere from, we'll say, $800 to $1,200 a month. And once again, I'm going to keep that the same. I put 800 plus because my minimum per month investment in Robinhood, I want to be $800. Now, I have about a 50-50 split between growth ETFs and dividend ETFs. That's my personal preference. It's up to you guys what you guys prefer, but I'm going to stick with that same ratio. At the end of the year, I'd like to have $9,600 out of pocket invested into Robinhood. When it comes to savings, I don't really save that much money because I already have savings for the things that I need. When it comes to budgeting, I've already built in discretionary income for things like going out to dinner or going on vacation, stuff like that. So this $100 a month, basically just to grow my savings account. There's really no rhyme or reason to it. But at the end of the year, I'd like to contribute at least $1,200. So in theory, I'm gonna contribute $38,500 out of pocket. However, because of the tax advantages of the 401k, I'm really only gonna be doing around $32,000. So yes, $38,500. However, I'm saving some money on taxes, so we'll say around $32,000. But out of my own paycheck, because I don't include the blue part, the 401k, it's actually only $18,000. So $18,000 divided by 12 months is $1,500 a month. So my goal for 2022 is to invest $1,500 a month minimum into my financial future. However, as we talked about in the very beginning of this video, we also have a company match. So just because I'm contributing $18,000 after my paycheck, my company is also adding to that. And when we look at everything all together, my total investments is going to be $47,000 or more for the year of 2022. And this is a plan. It could change. If I make more money, then obviously I'm going to invest more money. If some of my side gigs start to pick up a little bit, I'm going to invest more money. Who knows what's going to happen? All I know is that at a minimum, we will invest just under $50,000 in the year of 2022. Now, we've gone over the money. However, we are not just keeping this money under a pillow. We are investing 99% of it. So we want to forecast out where our money is going to be or how much my net worth is going to change by the end of the year. Now, before I did any math or any calculations, I went into it and said, well, my net worth is a little bit over $200,000 today. So next year, I'd like it to be $300,000. Sounds awesome. I use the investment calculator and we're not going to quite reach that goal, I don't think. Doesn't mean we're not going to try, but I'll show you the findings. You can use this same tool for you to budget out, especially for long term. Determine a number that you want to hit, maybe use the 4% rule and say, well, I want to withdraw from this account 4% a year for the rest of my life or 3% a year, whatever you believe in. And hopefully that's enough money for you to live off of. Maybe that's $3 million, 120 grand a year. Maybe it's $5 million, 200 grand a year. Depends on who you are. Use the investment calculator. You can do what you want to do, which is awesome. So let's look at it. So this investment calculator is one of my favorite tools when it comes to forecasting out where I want to be in the future. So all you need to do is type in your starting amount. So for me, I'm going to start with $200,000. And all I want to do is see, am I going to get to $300,000? Well, we only have 1 year, which isn't very much. We're going to say our return rate is going to be 10%. Now, this is a little bit more aggressive than the average. However, I'm saying 10% because I take some risk that could potentially pay out. I may have a much higher return than 10%. I may have lower. Luckily, I'm pretty young, so it's not going to affect my retirement too much. But I'm trying to be aggressive while I'm young. So we are going to compound this daily, and our additional contribution is going to be $4,000 at the beginning of each month. You can change to the end. It's not going to change much. I'm using $4,000 because if I take my $47,000 and divide that by 12, you end up with just under $4,000. So we're going to say that I'm going to invest $4,000 a month, and we're going to see what we're going to end up with. So as you can see, the prediction is that we're going to end up with $271,000 in our net worth at the end of the year. So if I want to change this, how can I get to $300,000? Well, let's just change the return rate. Let's say we get lucky and we get 14% return, not 1,014. Still pretty low. So realistically, it's going to be really hard to get to $300,000. I almost need to bump this to, we'll say, $5,000. Go back down to 10%, and let's see where that gets us. Not even there still. So in order for me to get to $300,000, I would need to get 14% and contribute $5,500 a month. It's a little bit out of the budget right now. Who knows? Maybe I'll get a good raise. We'll see what happens. But that is one way you can use the investment calculator. Now the next way is I want to look at the future. So I have a personal goal. I want to be a millionaire by the time I'm 40 years old. Now I'm 31 right now, so I have 9 years left. So let's go ahead and do 9 years here. Let's do the average of 8%. So we're going to predict a lower return, but that's okay. We'll leave the compounding at monthly. Why not? And we're just going to stick with what I'm doing right now today. We're doing $4,000 a month. We're going to stick with that. In 9 years, will I be a millionaire? I will. It's beautiful. It's a pretty cool tool. So like I said, the great thing about the investment calculator is you can pick a number, figure out how you got to get there. Maybe you got to invest more money. Maybe it's got to be a longer term goal. If you got to invest more money, you need to make more money or you got to spend less. One of those two things. Figure out what you need to do to reach your financial goals. The cool thing about my goal is that's assuming everything stays exactly the same. However, when you work a 9 to 5, generally you get raises. Maybe you get a bonus. Who knows what's going to happen? Promotion, new job, I don't know. But if everything stays the same as it is today, it's going to take me about 9 years to get to my goal. Now, the $1 million is not the end goal. That's just one goal. We have the 1 year 2022 goal. Now we have the 9 to 10 year goal. And then beyond that, we have a goal for retirement. Now, I don't have a specific date yet or time or number. I'm just going to work while I feel comfy. And then whenever my wife and I feel like stopping, then we'll stop. We're doing what we can to set ourselves up for the future to give us the option to do what we want. We don't want to be tied to needing a job. We don't want to be held down by the man or the government or anything like that. We want to be financially free. And that's what you should want too. If you thought this video was interesting and you're still watching now, if you haven't already, smash the like button. Make sure you subscribe to the channel. We're going to continue doing weekly videos every single Thursday on all things finance, savings, investment, credit cards, all the things that make us more money. I hope to see you guys in the next one, and I hope you guys have a great holiday. Take care.